How are we doing today, folks? Today we're here with the wonderful Allison Ostrander, and we're taking it to the streets with her profit recycling strategy. This is the same strategy that landed Allison a 2,000% return on SPX this last September. Needless to say, Allison is taking names, people. Some quick housekeeping to go over. You may see some interactive features like polls and offers popping up during the webinar. Also on the right hand side, you'll see a live Q&A tab where you can ask questions that will go to our moderator team as well as Allison at the end of the presentation. If you'd like to maximize your screen real estate, you can minimize the chat section via the down arrow just above the chat, and you can also maximize the video by hovering over the video and clicking enter full screen. I'd also like to note that if you stay until the end, you will have access to a download of Allison's trading in and out of volatility checklist. This will appear as a pop-up and a download in the handout section. And now I give to you, without further delay, the one you've been waiting for, Allison Ostrander.
That. All right. Hey there, everybody. I hope you guys have had a wonderful trading week so far. I am very excited to start tonight and talk with you guys about my profit recycling strategy. Now, for those of you who are brand new to me and maybe have never heard this term before, don't worry. I will be introducing it tonight. It is a strategy that I have used throughout my trading career, and it has completely changed the way that I go about trading. And certainly, I have found it to be very beneficial to growing my account. For those of you who know about profit recycling and have an idea of what it is, then tonight I hope to share with you the ways that I have adapted this strategy in order to trade the volatility that we saw last year and something that I think is going to stick around going into 2023. So I'm very excited to talk with you guys about that tonight. What you can expect from tonight's webinar is how the concept of risk can be beneficial for your trading, right? Why this is the main forefront of my trading. First and foremost is capital risk and the ways that I can try and keep it as small as possible while still being able to use it to grow my account. The introduction of the recycling profit strategy, right? What is profit recycling and how that might be beneficial for you. The compound breakout tool, as well as the divergent bar indicator, and how I like to use the combination of these two indicators to give me really great trade setups, whether it's on an intraday time frame or all the way up to a yearly time frame, which we'll talk about some, as well as making necessary adjustments depending on the market condition. Have you guys ever wanted a second chance on your trade before, where you might have done well overall, but then it's going for you and all of a sudden you lose it and you wish you just had a way to go back around and flip that trade to where it could still be a winner? um, Type yes in the chat if you have, or no if not, right? Maybe you're just flying solo, you're great on doing the trading the way you are. But I've certainly had that feeling before. And the thing that I love about profit recycling is it actually gives me the flexibility to sometimes turn those losing trades back around to where I still end up being profitable by the end of the trade. And it's kind of like having my cake and eating it too. And I'm hoping to be able to share these strategies with y'all here tonight. So here's an example of one of the ways that I have used the profit recycling strategy during the CPI report. Overall, one second. Let me move that. There we go. So overall on this was a trade that I opened on the 12th for a very small risk of 50 cents. And one of the themes you might see in tonight's webinar is how I really do like to keep that risk as small as possible. And I'll talk about why. But I set this up literally the day before going into the CPI report. And that next day, CPI came out. It was on the 13th. And I was able to lock in a $6.30 profit while setting up a bonus trade going into the close. And on the cash settlement of that trade, I took an additional $5 of bonus profit and in total locked in a $1,130 profit, which was a 2,260% return on that original risk. Good to see. So it seems like a few of you guys are on board with wanting that second chance on a trade. So hope to be able to share ways that you might be able to do that tonight, or how I have used the profit recycling strategy to be able to work around that. As well as at the end of the webinar, if you aren't already aware, I will be sharing a CPI trade idea that you might consider taking going into tomorrow. For those of you who don't know, CPI is tomorrow morning prior to market open. And so I'm going to share one of the ways that I would consider trading that if we do see that pickup in volatility, which is anticipated kind of at this point with how we've seen this report act in the past. Here's other examples of where I've traded that CPI data. Like I mentioned, I traded that one on the 12th for a really nice return. We did this one here on November 10th. That was CPI data as well. For this one, I did an intraday setup, which is something I'll be sharing with y'all at the end of the webinar tonight. And on this intraday setup, after the news had already occurred, I found an entry point where I was able to start the trade off with a small 75-cent risk. And by the close of the trade, I was able to lock in a $5.87 profit, which was a 782% return on my risk. And that's all without day trading, right? That's all by avoiding that pesky day trading rule. So just getting started, right? We're going to talk a little bit about me and my trading journey, about profit recycling, as well as the indicators that I like to use, my goals, what I want you to gain, as well as a little bit of a Q&A at the end. So for those of you who don't know me, my name is Allison Ostrander. I'm the Director of Risk Tolerance here at Simpler Trading. And I have no traditional finance background whatsoever. I actually graduated from theater with a BFA in theater performance. And to help support myself while pursuing my career in theater, my dad introduced the idea of trading. He was actually getting started on his options journey. He had done things like covered calls and stuff in the past. And he really wanted to get the kids involved because he thought it would be a great way to be able to support ourselves, to not have to rely on the man in order to make money. And it sounded like a great way to me to not have to wait tables and potentially use that money to support my endeavors. So I was all for it. And like I mentioned, my dad had dabbled with some of that trading and that education in the past. So when the idea was brought up, I decided to kind of test it out, right? Make sure I had an understanding of what I was doing. Maybe you guys did the same thing where you found as much free education as you could, dived into that to get some sort of base knowledge. And then from there, I kind of paper traded an account to make sure that I had at least some sort of grasp of what I could do before actually spending money on further education. And once I was able to grow that paper trade account, I was like, okay, let me dive in a bit and further my education a bit more so that I can really get started with real money and get going on growing accounts. And so from there, I dived deeper into that education, like I mentioned, and I took some one-on-one coaching. And on my first real money trade, I had already recouped all of my coaching fees along with a profit. And at that very second, I soon became hooked, and trading became a second passion of mine. And I haven't stopped trading since. Even when I had my kids, I was, my daughter actually came early, and I was sitting there in the hospital room holding her in one hand while I was like trying to close and manage trades out in the other. So literally am a nonstop trader. But early on in my trading journey, I started to get this feeling of negativity. And I knew that there was an underlying problem starting to bubble under the surface that I couldn't quite get a grasp on. And after a while, I started to realize that that problem was that I truly didn't have a good grasp on risk. And more importantly, what the risk tolerance was for myself. It was like I was hitting a punching bag thinking I was the greatest in the world. And, starting off winning on your trading journey right? When you start with a really good win or you have a really good winning streak to begin with, sometimes you have a harder time grasping what capital risk is. Maybe that was the case for some of you guys when you first started trading. You were just hitting winner after winner. You thought you had a really good run. And then all of a sudden you get that one losing trade, right? I know that was the case for me. And when I took that first losing trade, oh, it completely knocked me out. Like I was stunned. I like just sat there in a daze wondering how I could lose all of those profits, right, on a single trade. And I just could not quite grasp it. And I knew that I was never going to have that feeling again, right? It is one of the worst feelings in the world. And that's when I really started to dive in and it really started to try and understand what this dark side of trading was and how to avoid ever taking a loss like that in my account again. And so when I started to dive into my trading and started to look at things, there were a few things that started to appear that I needed to take a closer look at, right? And so these are some of the negative things, or what I like to call the dark side of trading. And maybe some of you guys have also felt this before too. Certainly let me know if this is one of your issues, right? Eyes glued to your charts and futures long after market close. Are you one of those insomniacs that are literally up in the middle of the night checking out what Asia is doing? How's Europe opening? What's pre-market looking like? Did any, CPI comes out pre-market? What's that looking like? I certainly was there at one point where it felt like I was constantly thinking about the trades that I had on and how these other markets, how these external events could be affecting those going into market the next day. And of course, when you're up stressing all night, when you're keeping an eye on other things, unless you're doing futures trading, right? That lack of sleep starts to get to you, especially if you have a lack of sleep because of how many trades you have on, right? If you're really having to go through your accounts stacked up, maybe across multiple trade ideas, across multiple symbols, you can get stressed with all of that piling on. And of course, emotions all of a sudden started guiding my trading, right? Back when I was paper trading or when I was first doing those trades and having those winners, it was purely technical. I had the plan, I put it on, I took the profits, right? But then all of a sudden, this loser had my emotions trying to guide my trading more instead of the technicals that I learned off of. And of course, having that staggering loss, right? I did not ever want to see something like that in my account again. I did not want to have one loser eat up 50 of my profits, right? I want to see that reversed where I can easily cover a loser because of the wins that I have. And so all of these I realized stemmed from one source for myself, and that was capital risk. And in turn, was what my own risk tolerance was for not only per trade, but what it was for my overall account. And the lack of understanding around capital risk is what fed into all of these negative thoughts, right? You start to go to the dark side, you become Darth Vader to yourself, to your family, to your trading account. And so when I started to understand that capital risk was the issue, I realized that I had to do something to take a handle on it because I wanted to enjoy trading again. And I didn't want my emotions to guide my trading. And in turn, of course, lead to further losses. So once I realized what was lacking from my trading plan, I adjusted the internals around and I had a full attack plan for my trading account. The strategies, right, the technicals, everything we learned there, I used and I implemented. However, capital risk has continued to be the number one priority for me when trading, right, and my risk tolerance. And that to me, having that grasp is what keeps me from blowing out my accounts, right? Because as traders, we got to understand we're going to have a loss. We're going to have maybe a losing day or a losing week or, God forbid, a losing month. I know I struggled personally last year on some of my trades because I kept anticipating this market turn down. Oh, I said last year. I should say 2021, right? It's a new year. But 2021, I actually struggled a bit because I kept anticipating this turn down and I kept trying to almost call it too early. But with that struggling year, I never blew out my account, guys. And that's because of the hold on capital risk. And by 2022, that loss that I had completely recouped, right? I'm profitable for 2022 covered the losses from the year prior, still am net ahead. And that is because my control on capital risk, as well as needing to understand when to adapt for what market environment, right? You don't want to get stuck in trying to think that the same thing is going to work every time, because not every tool is used in the same market, right? When you're building a house, you don't use a hammer in every single step of the process. You're going to have a staple gun, you're going to have a screwdriver, you're going to have a wrench. And so it's understanding what tool to use versus what market. But first and foremost, at the top of everything is having that grasp on capital risk itself. And so once risk became my main focus around trading, I constantly started analyzing my risk versus reward on individual trades, what that would do for my overall account. And it's how I developed my 25% rule for risk management, where I only risk 25% of my account into multiple new trade ideas. I have 25% of my account left over for potentially any management of those trade ideas, of course, split apart. And then I have 50% of my account left untouched. That way, if I have to pay myself on a down week, I'll be able to do that. I always have capital in the back, so I know my account's never fully invested. And worst case scenario, if I ever lost on both of those trades, I can take a step back. I can look at my trading journal. And then with that remaining 50%, I can then once again apply the 25% rule and try and work myself back up once more. So, right, with this understanding around capital risk, there is no more dark side of trading for me, or at least I can keep it at bay, right? And I found myself enjoying trading once again and creating a great way to support myself as well as the other things I want to do in my life. And so let's talk a little bit about this profit recycling strategy, because like I said, this is my bread and butter. So what is it? Well, it's an options trading strategy. It's a strategy that is used primarily to take advantage of intraday moves within a market. And it's especially great when we have volatile moves in daily ranges of over 100 plus points as a normal situation, right? So it's a really fun strategy to use, of course, while avoiding that pesky day trading rule. Who is it for? Well, it's for anyone who trades options, but has maybe had problems with capital risk in the past, right? Maybe you're one of those people who did overinvest their accounts and, God forbid, potentially blew it up, right? Hopefully not. Or maybe you're just one of those people that don't like to have their risk out there for very long. If there's a way that you can take the quick win and put that back in your account, right? That's kind of the strategy for you. But it's also for people who want to grow their accounts. It's certainly a great strategy for smaller accounts because it gives us the way to take advantage of the intraday setups without having that pesky day trading rule. But I will say this is a strategy I also used to trade in larger accounts because there's a lot of fun aspects of it that can still help grow larger accounts as well, even if you aren't limited to the pattern day trading rule like we are maybe in small accounts. What type of market is best for the profit recycling strategy? Well, technically, this can be used in any market environment. What we had in, 2015 is not the same market that we had in 2018. It's not the same market we had in 2021 or 2022. And this is a strategy I've traded all throughout my trading career. And it's kind of like my Swiss Army knife, right? A Swiss Army knife has multiple tools in it that can help you out in a variety of situations, but it all comes in this nice, clean package. And that for me is profit recycling. And so, what I've done this year, for those of you who are maybe familiar with the strategy, is I've adapted it, right? I might have used one of the tools before, but this market, I mean, you got to agree, guys, right? The market that we're in now is not the market that we had in 2021 whatsoever. And so I had to put back the tool that I normally use in trending bullish markets, and I've had to adapt that now to fit the current market environment while, of course, being mindful of my capital risk, which is key. And so, it can be great in choppy markets, volatile markets, trending markets. It's all about how you can adapt it and fit to whatever the current market environment is giving you. And just like I mentioned, the volatility can really be your friend in growing the account with this kind of strategy. What account size is this for? Well, it's a wonderful strategy for traders with smaller accounts, like I mentioned, because it gives you that way to avoid the pattern day trading rule. But you can also use it in larger accounts, certainly, and be able to still grow them and use the same advantages as we do in the smaller accounts. So along my trading journey, I actually helped family members with their accounts, and they had varying sizes. And I used to actually trade larger accounts first, and then I started to go back and trade smaller accounts. And when I started trading smaller accounts, I got very frustrated at the pattern day trading rule. I, even to this day, don't understand why having a certain amount of money means I'm limited to taking a day trade versus when I'm not. Like, I still don't quite grasp why that's the case, but it is. And so what was frustrating to me is I wasn't able to sometimes take advantage of these nice intraday setups that I could in large accounts, to where I couldn't that smaller account and really see it grow the way I wanted it to. And so that's kind of where profit recycling came about, because as I talked to fellow traders about volatility, and we watched the charts and the options chain throughout the market, it was then I started to kind of discover this strategy. And it's almost like a light bulb goes off. I've talked to experienced traders about profit recycling. And once they understand the concept and they grasp it, it's like a whole new door to Narnia like opens up, and there's this whole new way that you can trade that you never thought was possible before. But you can on a very small risk, and it can be a lot of fun using this strategy throughout the market. And so from there, when I first started to see this before my eyes, if you will, I found the light. I started testing it out and developing it, and understanding the rules, what to look for, what not to work for. And of course, like I've said, as we've continued throughout different market environments, throughout my trading journey, I have continued to adapt this strategy to make sure that it, no matter what, is being and keeping my risk as small as I can, but not limiting my profit potentials, and really allowing sometimes for some excellent returns, especially with the volatility that we've seen. And when I started first developing the strategy, it's what allowed me to grow a 10K account to over 47,000 in just under 3 months using this strategy. And that was a bit more in a volatile market. So, like I said, it can be a lot of fun in trying to grow your account. And as I did this, I realized this was not just a way to trade small accounts, right? But that I could use these same techniques and apply it to large and bigger accounts, probably more contract amount, and have a fun way of growing those as well. And so, just to show you guys, right, how some of my trading went last year, this is my $500 challenge account. For those of you who aren't familiar with it, in short, what I do is I start the month with $500. And it's a way to teach people my age, or younger or newer to trading, that you don't need to have a Warren Buffett size account to trade. And even on as small as $500, you can still split that apart between multiple trade ideas and grow an account. So I start each month with $500. I try to see where I can grow it. And by the end of the month, if I have profits, I pay myself. And if I don't have profits, then I reset the account to make sure at the next month it starts with $500. And I think by like February of last year, I was already at a point where I was profitable for the year, right? There was no way I was going to lose the profits by resetting the account each month to $500. And at the end of the year in total, had some winners, had some losers, but walked away with the account having grown to $2,333, just shy of, a very certainly a 500% return or something like that on risk. So certainly not a bad way to take a small amount of money and be able to grow it while really teaching about capital risk. And I do want to share this warning with y'all. I just found this out actually not too long ago. And so I want to make sure anyone who has tried to use this trick is aware of it, because I was caught by surprise. And it's not just Tasty Work that is doing this. Basically, the FNINR, or whoever it is that makes all the regulations around trading, they have implemented a way where basically if you hold multiple accounts within one brokerage platform, it used to be where each account had 3 day trades per it if it was under 25,000. And so I know some people, right, That's how they avoided the pattern day trading rule. They'd be in one of their accounts in the brokerage platform. And then once they used their 3-day trades there, they would go to the next small account and then use those day trades and so on and so forth. Well, they've changed that. And now you can only have 3-day trades across all of the accounts you have in that brokerage platform. Now, if all those accounts I think are above 25,000, you might be okay. But if they're under that, right, you are limited to 3-day trades across all the accounts combined within a 7-day period. Otherwise, you will get flagged as a pattern day trader, and that will work against you. And so, right, another way to work around that rule is with a cash account. But unfortunately, with cash accounts, the reason why I don't like to trade those and why I still do a margin account is because I can't trade spreads. So it limits me on the different strategies that I can use to really adapt to any market environment. It's hard to keep risk low if all I'm doing is the long call or long put, right? You have to be really mindful of your strike level, of the delta, and things like that. And of course, there are no fun bonus trades then that I can set up in a cash account like I can when using the profit recycling strategy. And so the profit recycling strategy to me is the main way that I avoid that pattern day trading rule. And some of the other benefits, like I mentioned, are building up and growing accounts, immediately having the ability to recycle both your capital risk and potentially profits back into the account. And what I like to call bonus trades or free trades can be set up and created and still out there to give you a really nice win, all without having any sort of capital risk involved. And that's what I find the fun part about profit recycling is getting as many bonus trades as I can set up without having any sort of capital tied up within the trade. And so some people ask, of course, can this be done on swing trades? And the answer is absolutely. I love doing this on swing trade setups and intraday setups to be able to grow my account while minimizing my risk as much as possible. Primarily, of course, I use it on an intraday setup because that's what helps me avoid the pattern day trading rule. But it can certainly be used across multiple time frames. And I've did that all the way up into last week even. So what challenges can this strategy overcome? Well, this strategy is a clever way, like I mentioned, to bypass the pattern day trading rule for people who have accounts under 25,000. This strategy can also help reduce capital risk left out overnight or over the weekend, but still have trade ideas set up to take advantage of the chart move. And it's especially helpful when navigating the constant change in volatility that we've seen. I don't know about you, but I'm pretty tired of the overall consolidating chop. I am looking forward to CPI tomorrow to see if we can get back into a trending day. And even volatile markets, right, can still have days or have weeks where that volatility shifts down. And so it's important to be able to identify when there's that volatility and when there isn't, so that you can shift and move with it and not be stuck trading a strategy that might not fit the market environment that day. And so here's an example of a profit recycling strategy I did. I opened this at $9.19 for a $1.20 risk. Little over an hour later, an hour and 10 minutes later, I was able to lock in a profit of 50 cents per contract. It was a 41% minimum return. So worst case scenario at that point, all my risk was covered. I had locked in a profit. All of that's recycled in the account. And then I had a fun bonus trade going into the close. And that bonus trade ended up cash settling for $2.29. And it was a total profit of $2.79, which was a 228% return on that original risk. Certainly not a bad way to go about trading these intraday moves while never triggering that pattern day trading rule. Here's an example of Tesla. For those of you who have maybe been following along with me over at Simpler or on my social media at Twitter, Tesla is a strategy and an entry that I gave y'all back here in early December. And it's one that we've been trading along this volatile move lower. And at the point that I had created this slide, in the account for that week, we had locked in a $424 profit per contract, which was a 424% return on my initial risk. And I had 3 bonus trades set up by the end of the week that had the possibility of additional profit. And my max risk on that trade for the week was $100. And that doesn't count the prior weeks that we had been trading Tesla. So that has been a really fun way to profit recycle, even off swing moves. And it's been a great way to where I've been able to keep my capital risk small or even eliminate my capital risk, but still have trades out there to take advantage of this volatility that Tesla saw at the end of last year. And it really kept going, right? It dropped down close to 100 is where it went. So finally starting to bounce up a little. We'll see if CPI can save that or not. But let's talk now about some of the adaptations that I've done for this strategy. For those of you who have maybe are familiar with other zero-day trading strategies like the drama-free trades or the quick hit strategy, the thing about profit recycling that I love so much is it actually complements those strategies. So if you are familiar with those and have taken those prior classes, you might find that this too can complement ways that you've been using those setups. So why is this more important now than ever? Well, it's the start of the new year, right? And with all the volatility that we saw in 2022, and as well as the moments where that volatility disappeared, we're seeing that quote unquote variable volatility where it requires trader needing to adapt and understand when there is volatility and when there isn't. Because we got to understand no matter what, volatility is going to go in and out of the market. That's what happens. But it's not understanding like, oh, there's volatility, right? We don't want to understand when it's too late. We need to know when that shift is occurring so that way we can stay on top of what strategies we need to use, right? What Swiss Army knife tool do we need to use versus using something that just does not match up and in turn could start to eat away at the profits that we had locked in prior. So, what were some of the issues with 2022 that I had to where I had to adapt this strategy once again? And maybe these are some of the things that you found to be difficult as well. Huge gap moves both up and down, right? CPI can sometimes have crazy gaps to the upside. We actually just talked about in the mastery earlier today where, one of the last CPIs, we saw a 100-point gap to the upside and then close to a 100-point daily range from the close of the prior day. It's crazy. And just like I mentioned, we have wide daily ranges, right? Sometimes over 100 points, sometimes close to 200 points. And as traders, these are kind of ranges that we want to take advantage of, but while keeping risk low. And unfortunately, when volatility hits, it spikes up the cost of everything, right? It feels like inflation has hit everything, including the market and including these option premiums. And that's what I found difficult is I will never go over what my risk tolerance is. I refuse to. I'm never going to see a big loss like that again in my account. And so as much as I've been wanting to trade the setups at the start of 2022, the frustration came that it felt like I was getting priced out because the options premiums just got to be so expensive on the traditional way I would use this strategy. And of course, we've had strong moves both up and down, sometimes even back to back, where we, initially off the Fed news start to skyrocket to the upside. And then it's like the next day they digested that food. It's like, oh my gosh, I should not have had that Taco Bell that Powell gave me. And then it drops right back down. And so it's being able to adapt and keep our risks small while still being able to take advantage of these crazy situations that happen both to the upside and to the downside. And then, of course, maybe that uncertainty, right? Maybe because of these crazy swings and everything else, you had an issue with knowing when to go long and when to go short, right? Maybe you were a bit hesitant on like jumping in, if you will, to the trade idea because you just didn't want to get it wrong, especially if you had maybe taken a few hits early on in the year, and you just didn't want to keep seeing that negative account because you weren't quite able to catch the right direction or you got in a little too late. So early on in 2022, when volatility first started to appear, I personally saw a wonderful intraday setup. And I looked at using the more traditional way of this strategy to try and jump into a long put. But when I was walking through the options chain, I was just completely priced out. It was too expensive. And I really didn't want to limit my profit potential, right? I really wanted to take advantage of that volatility. But I couldn't, right? Was above my risk tolerance. So I had to sit back and watch the move, and the move worked out beautifully. And it is so frustrating when you have the right call, when you see the technical setup, but you can't take advantage of it because the market makers have priced you out with these high option premiums. And so how is profit recycling used in this type of volatility? Well, like I said, it's primarily used to intraday trade because of all the crazy ranges that we've had, while of course not triggering that pesky day trading rule. And due to the crazy daily ranges of 100 plus points being more of a commonplace, it caused those individual call and put options to become rather expensive when attempting to day trade SPX. It'd be like I threw my entire account into one trade idea. It's just, it's not going to happen. And it's like the only way that you can really stay within my risk tolerance, or at least for me, was to go super far out of the money to a strike that never seemed possible to hit, right? It's like that strike's never going to get there within the day. So why would I waste my money on something like that when I know it's probably going to get eaten away by theta decay? And of course, in turn, that can make it really tough for traders with small accounts like me, or for those of you who like to keep your capital risk as small as possible, which is also like me. Anything I can do to reduce it, right? So there are a few ways that I started to realize as I kept watching these moves and watching the option chain, where I can find ways to actually help maximize the profits while still keeping that risk right within your tolerance for the current market. And a part of that is actually trading those far out of the money calls and puts, which I know sounds weird, but it's about timing it to where those spikes in premium can actually benefit and work in your favor rather than working against you and having that theta decay eat it away. And it's also about using wide verticals to potentially profit recycle. Both of these kind of concepts and tweaking it a bit like this has really allowed me to take advantage of these volatility and at the same time keep the risk where I want it to be at. So here's an example where I was able to play one of those spikes in premium I just talked about. This trade I opened close to market open, 859, at a 60-cent risk per contract. At 9:05, less than a couple minutes later, right, 6 minutes later, I was able to protect all of that risk, lock in a small 10-cent profit, and then leave what I like to call a runner on. Less than 30 minutes later, after opening this trade, that runner was worth over $9 in value, even though the underlying price never actually reached that strike level for the day, right? It never got to that strike level. But because of how I timed the entry of that trade before the volatile move started to occur, I was able to take advantage of the spike in premium rather than paying that spike in premium back to the market makers. And that is what I want to do, right? I want to keep that risk small, and I want to use when those spikes happen to my advantage rather than to my disadvantage. And here's another one. This was actually a quick win during the holiday week, right? So prior to big news events that we can anticipate, like Powell opening his mouth or the CPI data that we've seen quite a bit this year, it's not uncommon to have the day prior be a little bit more muted. Oftentimes you see those intraday squeezes setting up. It's like it's building up energy to get ready to explode. And that can catch people off guard if they're anticipating that volatility to always be there. And so because we were mindful of that, and of course because it was a holiday week where we already know the volume's less, that put even more pressure to probably see that consolidated range. And so we adapted the strategy to what we do for when that volatility shifts back out of the market. We kept the risk small, right? 65-cent net debit per contract, opened the trade at 8:55. By 10:20 a.m., I had locked in a 65-cent profit, 100% return on my risk. And I technically had a bonus trade for that day. I don't think the bonus trade won, it was close. But either way, right? Who cares? I had 100% return on my risk and I was good to go for the remainder of that trading day. So, how is this different from maybe the profit recycling strategy for those of you who are familiar with maybe one of the prior classes or how I have taught this in the past? What does the reimagined mean, right? Well, in basic terms, it's how I've adapted it to trade this kind of variable volatility that we have in the market when we have these really extreme days of volatility, when that volatility starts to disappear, right? Because usually the last thing to disappear when volatility does is that spike in premium. So it's about understanding when this is occurring and adapting between those tools and my Swiss Army knife to fit the current market environment while using this strategy. And so I've upgraded it to adapt for this kind of curveball that we've been seeing the last year. And of course, right, we see that the Fed's actively taking down the market. We can see that there's a potential for more selling next year, and I'll talk about that here in a little bit. But the world is ultimately uncertain. Who knows what's going to happen? Who knows what news event could happen to throw things off? Who knows what, some rate hike could do to turn the market around? And so as traders, we have to understand that we're kind of living in this world of chaos always, right? Even in more traditional bullish markets, we've seen where just a tweet can set things afire for a day or a week. And so it's understanding when this stuff occurs, how we can adapt our strategies to play the volatility and use it to our advantage. And when that volatility starts to shift back, not getting caught still trying to use those trades that just are not going to work when the volatility is not there. And so some of the keys to profit recycling that I have found is using the divergent bar indicator and the compound breakout tool. Both of these are really great ways to be able to identify chart setups. And so it's what I like to call my dynamic duo of indicators, right? My Batman and Robin. And so when I first came to Simpler Trading, I was introduced to Eric Purdy, and he is the master inventor of coding and indicators here. And so I found myself hoping that he could take both of these signals that I use and find a way to make it so that it was easy to read and look at, and I could take advantage of seeing it in a nice, clean way. So the divergent bar indicator, what does this one do? For those of you who don't know, it's used to help determine whether the next bar or two will create a higher high compared to the current bar that printed the divergence. And the same thing is true with potentially seeing a lower low or not. So it can help with almost that immediate follow through of a move. And it can be great for some intraday trades, as well as setting up for a potential bigger swing move. What is the indicator for the compound breakout tool? Well, the compound breakout tool I use to help determine the type of trend, whether it's bullish, bearish, or consolidating. But on top of that, the indicator can also tell me when we're shifting from one trend into the next. And so it can really be a great way to identify, are we in a bearish trend? Is it still likely to keep going? Where might I finally consider locking in those profits if I'm playing things to the downside? And so here's an example of how I use both the divergent bar indicator and the compound breakout tool in an intraday setup where I locked in a 1,666% return on my risk. I had this set up on the 5 and 10-minute chart. There were also bearish divergent bars setting up on the 30-minute chart. And here's an image of the hourly chart. And so we had a nice bearish divergent bar forming. And on the compound breakout tool down here, we had bearish signals across the board on the majority of the intraday charts. So all of this sentiment told me that this could keep going to the downside. And then certainly, right, that's how I was able to lock in such a nice reward, because I knew that probability of it still going, right, was there with the compound breakout tool. And so the divergent bar and the compound breakout tool can be used on any time frame. Certainly the compound breakout tool, I very much do use on every time frame, from a 1 minute all the way up into a yearly chart. For the divergent bar, you can technically use it, right? It's valid. But I personally find that the lowest time frame I like to go from an intraday setup is the 30-minute chart. I usually find stuff below that gets a little bit noisy for that indicator. And so if you're trying to really do setups purely off the divergent bar, I would personally stick with the 30-minute chart or higher myself. The best part, of course, about both of these indicators is that once you upload them to your charts, there's nothing else you need to do, right? Eric's done an amazing job at making them crisp and clean. And so at most, if you want to change the colors on them, you can, but otherwise it's good to go once it's uploaded. And here is an example of one of those conservative intraday trades I did. This was an SPX profit recycled trade. For those of you who also like those SPX 0-day trades, I took this at 12.15 and had a $1.45 of risk. There were multiple bearish signals on the compound breakout tool setting up on different time frames. We had a bearish divergent bar starting to form on the hourly chart. And so I jumped into this, locked in a 205 profit per contract. It was 141% return on risk. And then I had another fun bonus trade to potentially take into the close that day for cash settlement, all once again while avoiding that pesky day trading rule. And so trading the market in 2022 has been difficult for both new and seasoned traders. Inflation also seems to be hitting the option premiums just like everything else. And this volatility does not seem like it is leaving anytime soon. So instead of paying too much, like I mentioned, for those high option premiums, I'd like to share with you the in-depth way that I have been keeping my risk low, that I avoid that annoying pattern day trading rule, and where I'm still able to take advantage of these really crazy swings and not limit my profit potentials on both the intraday and the swing perspective. And I also want to show you ways that you can consider taking a losing trade and flipping it back around, giving it that second chance to turn it back potentially into a profitable trade for yourself and your account, as well as what to do when the volatility leaves the market, because we know eventually we'll go back into a bullish trend again. So we need to be aware of what to look for when that volatility eventually starts to shift back out of the market once more. And so what can we expect? Well, this is a picture actually of a yearly chart and a quarterly chart. And for those of you who don't know, last year we printed a bearish divergent bar on the yearly chart, which means that we have a probability of seeing a lower low within the next 3 bars. And I gotta say, they usually follow through. But what's interesting is when this bar prints, like it did right before the 2008 move and like it did before the 2000 moves, sometimes it can be a clue for bigger selling. And so I dove into these time frames, and on the quarterly chart, I started to see a specific signal that every time we had a yearly bearish divergent bar, this signal would print on a quarterly chart to indicate that we might get a bigger move and a bigger follow through on a lower low. And that signal printed. So it's not to say it will follow through the same time again, but I personally am going to look for very low risk, high probability trades like we'll be teaching about in this class to take advantage of that volatility if it does remain going at least into the first half of this year, which is what I'm anticipating a bit more. And so talking about on that volatility too, I will also get to that CPI trade, but first let's talk a little bit about what we covered tonight. I covered how the concept of risk can be beneficial to your trading, right? Hopefully you have a better grasp on that like I do, on why it's so important and why you need to really keep that at the forefront of your trading. I introduced to you the profit recycling strategy, a little bit about what it's about and why there are advantages to using that and growing your account. I've introduced to you guys the compound breakout tool and the divergent bar indicator and how these can make for some really clean trade setups on the charts. And I've also talked about the necessary adjustments for trading in and out of high and extreme volatility back into a bit more of low and normal volatile market environments, whether that's just a shift for the day, like we saw today leading into a big volatile event tomorrow, or whether it's a holiday week or whether it's the ultimate shift back into a bullish trend. And so for those of you who are certainly interested a bit more about this strategy, whether it's your first time learning about profit recycling, or if you know about profit recycling and you want to see how I've adapted it for this market environment to keep risk low and really take advantage of these 0-day style trades and how it can kind of complement the quick hits and the drama free style trades, then certainly check out the class that I have coming up this Saturday, January 14th. I will have live trading on the 19th, 26th, and 31st, as well as February 7th. So 4 days of live trading. And I'm also introducing the idea of office hours with this class. I'm going to have 3 set up during market hours. The idea is you'll have the live trading, you'll have the class, you'll have been able to use it for a while, and then you can come back and ask me any questions you want around that, around trading, and I will be happy to focus and really answer them in depth. And if we manage to get through all the questions during that session and there's still time left on the clock, then we'll go right back into live trading again and see if we can't find any more setups for the day. And so if you're interested in this class, let me tell you a little bit about the different packages here. The first one is the basic package at $497. It includes the Saturday class that is live, just like we are live right now. So you will have that full experience and knowledge base to show you how to identify volatile market environments and when they shift from one to another, how to adapt this strategy to trade these market environments, and how it can really be beneficial to keeping your risk low, but still growing your accounts. And for those of you who are maybe newer to trading or newer to the concept of profit recycling, I didn't want to leave y'all in the dark. So I did also make, as a bonus for this package and for all the packages, the options chain class. I think having a really good grasp on the option chain can give you the biggest difference in trading overall, and especially trading this strategy. So I did a full class around the option chain and things to be mindful of. And I'm making that available to you. That one's already pre-recorded, so you'll have instant access to it if you choose to. And then I also want to give you a month of the Profit Recycling Mastery. As you heard me talk about, I have a toolbox of different strategies that I like to use. A lot of them encompass profit recycling, but I have other tools in there as well. And so the Profit Recycling Mastery is a great way to see firsthand those different tools that I have and how I've adapted them and how I switch between them when trading the different markets that we experience. And the Pro package, you get everything in the basic package I just mentioned, the live Saturday class, which will also be recorded, so you can always go back and rewatch it on your own time. The bonus options chain class is made available to you, as well as the Profit Recycling Mastery. So all of that looks good. But in the Pro package, right, you get all of those things like I mentioned, but you also get the indicators. So if you don't have the compound breakout tool and the divergent bar indicator, and you're like, Allison, you looked like you found some really great setups with those, which I do. I'm not going to lie. I love these 2 indicators. I use them across all of my strategies to find setups. And you want to add that to your arsenal, then this is a great way to do it and get it at a really cheap and discounted kind of price to be able to add to your charts and setup. And then if you want the elite package, you of course get the live trading class, which will also be recorded and at your access. You'll get the option chain class. You'll get a quarter of the Profit Recycling Mastery. So not just a month, you'll get a full quarter with me to really see how I trade these different strategies. And the nice thing about a quarter is, if y'all recall, I think there's going to be a bit more volatility going into the first half of next year. And I'm anticipating that volatility, if it follows through the same way that the prior signals have done, to be in the second quarter of next year. So if you sign up now for the first quarter, you'll be able to take maybe some of those trade ideas, or at least have an understanding of how I'm looking to definitely keep my risk small, right? Nothing that will blow out my account, but how I'm looking to set up to maybe play that volatility going into the second quarter. You will, of course, get the divergent bar indicator on the compound breakout tool, but the elite package gets the bonus of those 4 live trading days that we'll do to strictly look for setups to play either in or out of volatility, right? We'll see what market condition we're in, and then we'll go and adapt that strategy and trade it accordingly, as well as those 3 office hours, like I mentioned. So if you really, have a good concept of what we did in the class, but there are some things that you have a little bit of a confusion about or you want to make clear, or maybe there's a trade in the live trading where you're like, why did you do that setup again? The office hours are going to be a really great place where we can dive in and I can really answer those questions and make sure you have a good grasp of it. And like I said, if we get through all the questions and there's still time, I'm always happy to use the remainder of that time to look for some live trade ideas once more. And so, like I mentioned, that class with the basic package at $497 is Saturday, January 14th from 12 to 4. If you can't make it for the full class or you can only make it for part of it, like I said, don't worry, it is recorded. So you can always go back and watch it and still be able to get it at this good discount price compared to how much it will cost once it's added to the simpler store. The basic package, of course, includes that options chain class, like I mentioned. So, like I said, if you're newer to trading or you just kind of want to have like a better understanding and grasp, I really wanted to give you all of that knowledge base that I can to get you set up for the Saturday class so you feel prepared. So I'm giving you the options chains bonus class for free as that bonus added onto this package, as well as 30 days of the profit recycling mastery so you can kind of see firsthand how I switch in and out of some of these different strategies that I overall have liked to use and developed in my trading journey. Objectives, right? What are my goals for the class and what you can take away from it? Well, my first goal, first and foremost, is hopefully to leave you guys with a better understanding of capital risk and ways to be mindful of it throughout your trading. If that's the least I can do, then I'll say that I have succeeded, because if you can have that handle on capital risk, it's one step further to you never blowing out your account, right? To being able to really have that control so you don't find yourself with those huge losses that, I certainly have seen and never want to see again in my trading. And maybe you have too, right? I want to leave you guys with a class with a full understanding of the profit recycling strategy and how to adapt it for both volatile market environments and not volatile market environments, while keeping your risk low and hopefully not giving up prior profits that you had, whether it was trading in the volatility or not trading in the volatility. And of course, I want to give you the new ways of being able to adapt some of those trades, right? That might have start to look like a loser, and give you that second chance and show you ways to where you can flip and manage that trade potentially back into a winning trade, so where you can have your cake and eat it too. And of course, while doing this, hopefully while controlling those emotions and the dark side of trading. I, of course, am going to talk about the compound breakout tool and the divergent bar indicator, so you have a better grasp of that for those of you who are maybe newer to those, as well as the 4 days of live trading and the 3 days of office hours. So you can, one, have that live trading. So you have basically the lecture with the class and the lab with the live trading, so you can see firsthand exactly how I'm identifying setups, what I'm looking for, how I'm choosing strikes, what kind of strategies I'm looking at, right? And how I'm adapting it from one market into the next. And then, of course, office hours. So once you have all of this knowledge base in you, if there are still any other questions or something that maybe you think I didn't make clear or you want a better understanding of, that is a great place to go ahead and ask it, where I'll be happy to dive in depth and give you that answer that you're looking for. And of course, introducing new ways to take advantage of the intraday moves while avoiding that annoying day trading rule, right? Like, get that out of here. We don't need that. And profit recycling is my way, at least, of being able to avoid that rule. And of course, certainly last but not least, how to grow an account even if you've struggled in the past, right? I've been there before, certainly. And it can be hard to grow an account, especially if you've taken a hit and you're kind of struggling from a psychological standpoint of, do I even want to put my money back out there? I'm really concerned about putting more risk out there than I want to. And so hopefully with combining this good grasp of capital risk and what that might mean for you, I can help you get past this struggle and getting your account back up once more. And so in the class, you'll learn that deep dive or that foundation of the strategy of profit recycling for those of you who are brand new to it. But we'll also be diving into how that's adapted once again, to fit volatility and not. And that will be a big focus of what this class is about, is how it's fitting the current market and conditions and how to trade for it. And of course, in the mastery, right, we'll execute the strategy in real time. So in the mastery, I'm certainly happy to answer questions when I can, but our main focus in there is on trading, on the trade alerts and growing those kind of accounts. The class gives you that ability to fish on your own, to really have the grasp and that understanding. So that way, when you're in the mastery, you know the steps and process I'm going through because you have that back base of knowledge. And this way, right, you can see me implement it firsthand and take advantage of it yourself. And so the pro package, like I mentioned, includes the divergent bar indicators and the compound breakout tools. Now, for those of you who maybe have the indicators, I'm not going to make you double pay for it, right? So if you have the indicators, but you're also interested in live trading or something like that, please call customer support. They will be able to create an a la carte package for you to where you're still getting a good discount on everything, but you're not paying for something that you already have, right? Because that's silly. I would never make you guys do that. And like I said, with that elite package, you get the 4 days of live trading, you get the 3 office hours, and you get the tools. And if, like I said, you don't have the tools, you can certainly a la carte that package to make the sense for you and what you already have versus what you don't. And of course, you get a full quarter of the profit recycling strategy. Or excuse me, not the strategy, the mastery, right? So you can see me firsthand. I'm usually in there almost every day into market close, going over the trades we hold and looking for new trade setups. So it's a lot of fun typically that we have in there. And like I said, if you have some questions or you need to kind of do that a la carte packaging, please feel free to call in. We do have people on the line tonight, as well as, of course, Monday through Friday. Happy to answer your questions for you. And if you do pay by PayPal, just want to make you guys aware there is a thing called PayPal credit to where you can pay for 0% when you apply for over 6 months. So you can break that payment apart across 6 months if you choose to. And so, like I said, there's the pro package at $497, or excuse me, the basic package at $497, the pro package at $797, and the elite package at $1197. All of those get the class, all of those get the bonus option chain class. The basic and the pro get a free month of the mastery, where the elite gets a free quarter. The pro and the elite both get the indicators, and then the elite has the live trading days and the office hours with it. So like I said, if you have the indicators are ready, don't worry. Just give sales or customer service a call and they'll be happy to get it sorted, or you can certainly email them and they can do it that way. And so hopefully I'm going to show you guys a way of how to leave the guesswork out of your trading with this simple step-by-step plan and creating profits in your account while spending less time in front of your computer. So to me, the profit recycling strategy has really helped to benefit making those consistent profits with limited risk and protect capital when the technicals change direction, and how to adapt when they go from one type of market into the next. And then, of course, with the days of live trading, how to identify setups with the divergent bar indicator, the compound breakout tools, and ways to implement the profit recycling strategy live during market hours. So you can see firsthand exactly what I'm watching for, why I decide to jump into a trade, why I don't. And then you can start to have that understanding yourself so you can implement it whenever you start to see intraday setups that you want to take advantage of, or swing setups that you want to take advantage of. And so certainly we're going to go and we're going to ask questions. Whatever you guys have, let me know. And then after I answer some of your guys' questions, we're going to talk about that CPI trade idea into tomorrow. So let me get going here. And so a bonus trade is created through the profit recycling strategy. And if I had more time tonight, I would certainly try and go into that. But the base that you need to take away from it is, with the profit recycling strategy and the way it's implemented, it can make for what I call a bonus trade. And usually that bonus trade is set up in a way to where it doesn't hold any capital risk around it. And then you can look to take a bonus profit on something that you might have technically already closed out of and walked away on, but by using the profit recycling strategy, instead of just closing the trade and walking away from it, you actually create a bonus trade around it. And that's something I'll certainly be teaching about more in the class. And then, and so a divergent bar indicator, the basic concept of it is when it prints, it looks for a higher high or lower low than what we've seen. So here's actually a chart of SPX. And so, for example, the last CPI day that we had back here formed a bearish divergent bar. And so there was a good chance that within the next 3 bars, we would see a lower low compared to the low of the bar of that CPI day, the divergent bar that printed. And you can see the next day followed through with a lower low. And certainly it was a bigger catalyst entry for a run to the downside. And then a bullish divergent bar, same thing, has the probability of seeing a higher high within the next 3 bars. So I hope that kind of helps answer your question there some. And once again, of course, we'll go about it in the class itself. Sorry, guys, I'm just trying to see the questions here. And so the signal I'm talking about on the yearly chart, for those of you who have not seen my end of year setup that I do have a video that lives out there on Twitter that goes a lot more in depth to that signal that I kind of hinted at earlier. So certainly feel free to watch that. I could go into it, but it would take a lot of time. That video, I think, is over an hour long. But the only thing that I would take away from it, basically, right, the footnotes, if you will, is we are likely to see more volatility next year if it follows through the same way it has every other time it's printed. And the second quarter of next year will probably be the biggest quarterly range we have of whatever is left of this bearish move to the downside. So that's the footnotes of it. And so because that signal printed, I'm not going to load the boat. I'm not going to go crazy on risk. That's silly. But I will be looking at very small risk trade ideas that have very big profit potentials or have, some nice unlimited kind of profit potentials around them to where I can set that up going into this year, of course, and specifically the second quarter of this year. And then I avoid the pattern day trading rule by using the profit recycling strategy. And like I said, I'll definitely teach about that more in the class and specifically the steps on how to do it to avoid that pattern day trading rule. And at my regular hours in the mastery, I am in there almost every day into market close for the last hour. On Thursdays, it's usually the last 30-minute, given my current schedule that I have. But almost every day I'm in there the last hour of market trading with y'all, looking for different trade ideas. Sometimes we look for an SPX end-of-day pin trade for those of you familiar with that strategy. But like I said, the mastery is a really great place to go through all the different strategies that I've traded and see how I, switch from one to another and how I implement them overall. Technically, I'm in there every Wednesday, guaranteed no matter what for the last hour, but I'm usually in there almost every day. So, and yeah, for my socials, happy to share that. It's Allison _ trades with 2 L's. I'm sure my bots in the background will be happy to share that in the chat with you guys. Not a problem. But if you go there, this is what you'll see. And it's this very first pinned tweet that goes over that yearly outlook and that signal that I've talked about and hinted at here, which is what's having me anticipate a bit more of that selling into next year. And so if you do live overseas, I see somebody mentioned they lived, it sounds like in Australia. And so they're only available for a few hours of open and close. You can certainly look to adapt this strategy if you're able to trade spreads, right? You can totally look at profit recycling just at the open and close. Usually those are the more volatile times of day for the market in general. And as you could see with a lot of my trade examples, I usually open them closer into the start of the day, and then I profit recycle them. I, take my second step of that strategy and then go about my day and look for it to fill and give me a bonus trade. And like I said, that's all stuff I'll teach about more in the class, but you can find ways to use this strategy on limited times a day, especially like I said, if it's the open and close, because that's usually when the market moves a bit more. During the lunch hour, it's just kind of flat overall, right? And so my win-loss rate on this strategy is a little bit hard to determine just because I use and adapt this strategy as much as I can. And so, like I said, in the class, we'll specifically focus on how I've adapted it to fit both the volatile market environment and what to do when that volatility leaves, whether it's for a short amount of time or, it's because we're going back into a bullish trend. But overall, year to date, I am profitable both in the mastery and the $500 challenge. And like I said, on the $500 challenge account, we reset the account each time to $500 for that growth. And in the mastery account, I usually keep the account size between $5,000 to $10,000, and I'll pay myself out of that account, but I usually try and keep it small like that with the trades that I set up in there. And of course, being mindful of that 25% rule on risk. So hopefully I've answered a good chunk of y'all's questions. I believe I have. If you do have any more questions and I haven't got to them, I do apologize. Please feel free to contact CS, contact customer support, and they will be happy to give you the answer to that question. And if it's an answer they don't know, they'll reach out to me and I'll let them know what that answer is. I'm more than happy to still answer it. But I know a lot of you guys are probably wondering what the CPI trade is, and so I don't want to keep y'all any longer. Let's go ahead and talk about it. So, as I kind of mentioned in the webinar, there are a few different ways you can trade CPI in big anticipated volatile events like this, like Fed news events and things like that. And we'll certainly teach about this all in the class. But I wanted to give you an idea of what you might be able to do for tomorrow, at least just a simple trade idea, right? So you could have looked to put on something today prior to the CPI data to try and play the actual potential gap move that we could see at the market open, because that data is released prior to market open. But you can also trade after that move starts to occur. And so the idea here is you'll want to give, or I at least like to give the market a little bit of time, right? Have a good understanding of, is this a gap and go kind of CPI day? Like we saw here. Here's that move where we had almost 100 plus point gap and then it moved almost 100 points higher, right? Is it going to be that kind of day? Or are we gapping up and then instantly stalling? Maybe we're going right to 4,100, but that line of resistance is continuing to hold and it drops back off. Or is it a day like this, right, where we gap down, but immediately reverse, right? Is it a reversal move or is it a get going move? And usually you can identify that pretty quickly within the market day, right? I usually like to give the market about 30 minutes to kind of identify that, especially when it's a volatile news event like this. And that's what we're anticipating. And so depending on which it is, right? If it's a reversal day or if it's a get going day, what I would look to do at that point is I would look to jump into an out of the money call or put, right? Depending on which way it's starting to go. And here's the option chain for tomorrow's trade. Keep in mind, these premiums and everything else are going to shift tomorrow based on the potential gap move as well as where we're going. But the idea, right, there's a little bit more to this behind profit recycling, but just to give y'all a little nugget of something to go with tomorrow, is if we start to move to the upside, I would be looking for an out of the money strike, ideally somewhere at or below 4,100 to try and play up into that level, because that is going to be a big line in the sand for the market to try and get above. So if the market reacts positively to the CPI tomorrow, there's a good chance that we will break this current resistance range that we're in. And that is the big level to go up and test. And so ideally what you can do, depending on how quick the move is get an out of the money strike for cheap, and then if you have the ability to day trade, look to day trade it, right? If you don't, then you might go out the next trading day and see what you can do there, or maybe use one of your limited day trades if you're unaware of profit recycling, and look to play into that level, and see if that what appears to be a far out of the money strike goes in the money due to the volatility around this announcement. Vice versa, if we start to see things really drop back off, and when they drop, they can really drop, but you want to make sure that it's not a gap open to the downside and then it holds, right? So don't immediately jump in. I would still watch to see how the market reacts just a little bit. And sometimes when you watch a little bit, that helps cut back at least some of those initial premiums that are there right at market open, especially after a potential gap move like we could see tomorrow. But if it looks like it's a day where it drops down like here, for example, and then it sells, then the targets that I would look for an out of the money strike and for the move to potentially play down into would be 3,800. You might see a little bit of support at 3,875. And if you can get a strike in there and it's out of the money and that makes sense for your risk tolerance, you could. But I would imagine if the market reacts negatively to this tomorrow, we will likely potentially either open at that level, kind of like what we did here, right? Where we had this move up and then the gap down had the open at what was trying to be support and then we broke it. And so I think we could see a similar case like that. And if that happens, 3,800 to 3780, 3775, but really 3,800, right, would be that next big level to play to the downside. And so it's a similar situation of getting that out of the money strike where the cost basis is really low, but then it has that possibility of one, still playing for that trending move and that spike in premium for it to increase, but two, also choosing a strike level in line with a big technical level the price could go to, so that out of the money strike has the potential to be an in the money strike to allow for a really nice win. And so that's one way to kind of trade it. I won't know, obviously, what kind of gap move we have. So those are kind of the bigger outside targets that I'm looking for. And of course, if we start to break past them, at the open, for whatever reason, I'm not anticipating that kind of gap, but who knows with this market, right? So if we do, then I'll look to play accordingly to the next level. But I will do a video over this and I'll talk about how I would have looked at that intraday setup, depending on if the move looked more bullish or bearish after the first 30 minutes, and walk through how you could have looked at trading it or potentially manage it if it looks like it's starting to reverse, and what you could have done to maybe turn that trade from a loser, give it a second chance, and have it recoup back into a winner. So I'll do a video over that to kind of, follow up with what this trade idea is. For those of you who are familiar with the profit recycling strategy, then you might already have an idea in the back of your head of what you could do there to implement that strategy with this setup. But that's the setup I'd be looking for from an intraday perspective, guys, to really try and keep your risk low as much as possible, but take advantage of the volatility that is very likely to occur tomorrow. And you could use the Friday expiration call or put, Michael, if you're trying to avoid the pattern day trading rule, and you might have to hold it overnight if you're not familiar with profit recycling. If you have a day trade, you might consider just using one of the day trades to just lock in the profit, because sometimes these volatile days can shift right back around. So you kind of want to be mindful of that. Personally, what I plan to do is use the same day expiration as tomorrow, because that's what really keeps the risk small. And I will look to profit recycle that move. So hope that helps you out. And like I said, it's something we'll certainly be teaching about, that I'll be teaching about in the class on Saturday. So thank you guys so much for joining me. I really appreciate it. I hope you'll have a wonderful rest of your trading week. May the trade be with you, my fellow Jedis. Hopefully this, at the very least, helps start giving you an idea of how to be mindful of risk, and maybe sparking that thought for the first time in your head, so that it can help curve you from blowing out your accounts. And hopefully maybe gave you a trade idea here off CPI to have a fun time kind of trading that volatility and learning how those out of the money strikes can sometimes benefit you with the spike in premium when you can set it up properly. So thank you guys so much for joining me tonight. As always, may the trade be with you, and I look forward to talking to y'all again next time. Bye, guys.